Hello.
Gautam,
Good evening.
give a few minutes. Let the participants come in because Zoom mein, I think they are all in. Come, start.
Okay. Okay, sir. Hello, everyone. A very good evening to all of you from WIRC. So today we all gathered for this wonderful session by CA Sumit Jhunjhunwala on audit by GST authorities. So before starting the session, let us place our hand on our heart for ICI motto. Mishra ji, ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैता 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 एतद्द्वैता.
Okay. Thank you, Mishra ji. So we quickly move towards Chairman Sir. Chairman Sir CA Murtaza Kachwala for his opening remarks. Sir, over to you.
Thank you, Gautam. Let me welcome everyone to this program on audit by department. And at the outset, let me first thank today's learned speaker, CS Sumit. Extremely grateful. Thank you very much for accepting our invitation, Sumit, and deciding to spend your valuable time with the participants here today. Let me also thank the chairman of the Indirect Tax and GST Committee, Yashwant Kasar, and Vice Chairman Gautam Lad for the unique programs, the series of programs which they're launching. And really, the topic today again is the need of the hour. Like notices have started and the audit, GST department audit has started. And like today,
Sir, we lost your voice. I think you are on mute. Murtaza, sir?
Hi.
Yes.
So thank you very much to Sumit Jhunjhunwala for accepting our invitation and agreeing to be a faculty today. And also to the chairman, Yashwant Kasar, and vice chairman of the committee. And a unique program, the audit by the GST department has started. And I think today we got an opportunity to listen to and also make notes of certain points which we can take care of while the audit department audit happens, so that we can add value to our clients and ensure that it is handled in an efficient manner. So I think really grateful, happy learning to all of you, and over to you, Gautam. Thank you.
Thank you, sir. Thank you so much for your opening remark. Before moving to the session, I just would like to inform all the participants about the IDT committee of WIRC. We are also coming up with a public meeting on amnesty scheme on 18th May. We will soon be rolling out the program. So I would request everyone to please join us and let us hear from CST Commissioner of State Tax Maharashtra will be joining us. So we will soon, send you an invite and information about the event. So please be available. Apart from that, we are also coming up with 2 publications. One is on the amnesty scheme and the other is on Schedule 3 of GST. So which will be soon available on WIRC website for sale. So all the members who are interested can order from there, and a soft copy can also be downloaded from free. So we will be uploading it online. With this, without taking much of the time, I'll quickly move to our today's session. So today we have CA Sumit Jhunjhunwala. So CA Sumit Jhunjhunwala is a learned chartered accountant. He is practicing into indirect taxation and providing various services like representations to the government, audit and assurance services relating to GST, and opinions and due diligence in the area of indirect taxation. Sumit is a regular learned speaker and delivering lectures at various forums, including WRC of ICAI, CTC, GST PM, and various study circles and trade associations. Apart from this, Sumit is also co-authored of various GST publications like Budget Amendment Book on Indirect Taxation, Handbook on GST Valuations, Issues in EPC Contract GST, and he is regularly contributing various GST articles in trade magazines. Sumit is also managing member of CTC Committee, Chamber of Tax Consultant. He is Vice Chairman of Indirect Tax Committee of CTC. He is also a member of GST, co-opted member of GST and Indirect Tax Committee of WRC of ICI. With this brief introduction, Sumit, over to you for your deliberation. Thank you, sir.
Thank you very much, Gautam, for the kind words. Before I begin my session, allow me to thank WRC and Chairman Murtuzaji for inviting me to this forum to share my time with our alma mater. So it's a privilege to be over here on WRC platform, to be between learned members of WRC to share their views and thoughts. Friends, this topic, when the Indirect Tax Committee invited me, audit by GST Authorities, seemed pretty nice before I got to know the entire topic, how to handle them. As you all would know, handling GST audit is no small job. Especially before we have even started our sessions, I see certain queries raised by our learned members over here with apprehensions, what happens when the officers visit our place and how to handle these authorities. So with that viewpoint, I'm just trying to share my experience of almost like 4 years and 9 months of GST and almost like a decade experience worth of your service tax, how to handle these authorities who come to your doorstep with a viewpoint to demand some rightful tax and may not be some so rightful tax also. So the brief coverage of this session is divided into a few parts. First, we'll just have a quick background about what is this GST audit, what are the basic history on all these audit procedures, whether there has been some litigations as well or not. The legal framework now in GST audit, how does the department have the powers, what powers they have, what is the procedure, all these things. So the legal framework and the procedure, the requirements generally raised by these tax authorities while conducting the audit, the basic requirements, not much into all those things. Now, majorly, then we come to our topic of this, how to handle, what are the different common issues raised by these tax authorities and what is the way forward before us. And lastly, but not least, handling pressure situations when the officers get adamant, when they are insisting on certain things, a lot of things come into picture. What should we do in certain situations? So with this background, we are proceeding ahead. Friends, to give you a brief about this audit perspective, what was this audit? We all have been conducting statutory audit, tax audit, where all we have been acting as the friends of the taxpayers and the auditees, where we are assisting them, helping them to maintain their books properly. If you actually see GST audit, the GST audit manual, somewhere or the other, the GST audit manual itself also gives the viewpoint that this entire process of GST audit is not to catch hold of our necks and wring out all the tax from us. It's basically to assist the taxpayers to be in a better compliant position, nothing else. But sadly, that may not be the ground reality because of the erstwhile era, all these issues, the historic background that these officers are carrying. So before dwelling into the GST audit, just a quick 2-minute on the erstwhile provisions. So all of you would be aware that prior to GST, there were certain different kind of audit procedures by revenue in service tax or excise or VAT in form of EA 2000 audit, excise audit 2000, desk reviews, scrutinies, and a lot more. Majorly, the EA 2000 audit has been now put forth in the GST audit format. In this EA 2000 audit, friends, lot of members might be aware that the industry had challenged the very powers of the service tax department of the government of India, whether they can come to my doorstep and audit my books of account or not. Well, before the Delhi High Court had given a favorable judgment in our favor, stating that the government of India does not even have the powers to come to my doorstep to conduct an audit. Rule 5A of the service tax rules was ultra vires the Finance Act. Sadly, that judgment of 2014 was stayed by this Honorable Supreme Court, and I believe this final judgment is yet to come. But that did not deter the various other high courts from giving a favorable ruling in other cases like mega cabs, ACL educations by Allahabad High Court. Lastly, why I'm taking this aspect of year 2000 audit, friends, it is also possible that a lot of your taxpayers, a lot of your clients, a lot of you yourself, your organization itself may be subject to service tax audit as well, may have been subject to service tax audit during the past year as well, and there may have been demand raised by these authorities. Friends, it would be prudent to note that Gujarat High Court in one of the cases, or OWS case, has ruled that once the Finance Act 1994 was repealed, there was no saving provision under GST to give powers under Service Tax Rule 5A for the authorities to conduct a service tax audit. So that was the viewpoint of Gujarat High Court. So in case we have some frivolous demands before the service tax authorities for service tax era, you might also like to challenge the very power to conduct a service tax audit in GST era, taking cue from the judgment of Gujarat High Court in OWS case. So now, with that background, let's come to the GST era. Whatever provisions were there in your earlier service tax or VAT or excise in form of audit, desk review, scrutiny, similarly, you will find same provisions for scrutiny, assessment, audit, investigation in GST as well. Today, what we are dealing with is a GST audit, and they have defined this term. What is the scope of this audit? They've specifically defined the term audit in GST Act. The fundamental provision of audit is that whosoever is auditing the books is supposed to verify the correctness of the turnover that I'm declaring, the taxes that I'm paying, the refund that I'm claiming, the input that I'm availing, and to assess overall compliance with the provision of this act. So they have covered almost all bases. Nothing has been left unturned. So the officers who are coming over here may also ascertain what is the place of supply, what is the value, what is the time of supply. I might have paid the taxes, but may not on the correct time. I might have paid the taxes, but not on the correct state. So all these aspects are covered within the scope of the audit. They can verify my overall compliance as well. So that's the basic background about your GST audit, whereby these officers are coming with a viewpoint to ensure all these things are done properly. Now, friends, the issue that came in your excise and service tax era in form of your challenge to the very powers to audit, this emanated from the fact that there was no section in the Finance Act 1994 whereby the government was empowered to issue rules for auditing. The challenge was that there is no provision under the Finance Act whereby the government is empowered to issue rules, and therefore Rule 5 was ultra vires the Finance Act. The government tried to amend that by virtue of including a term, verification, that the officers will now have the powers to verify, and the mode and procedure for verification will be prescribed in the rules. Again, the same matter went back to the High Courts, and post the amendment also, the High Court have ruled that the scope of verification cannot give you the power to audit. Learning from their mistakes possibly, these authorities have now put forth a very clear-cut provision in form of Section 65 in the Finance Act, in the GST Act 2017, whereby they have given clear-cut powers for the authorities to conduct an audit by their officers. And taking powers from Section 65, they have notified Rule 101, which is a very basic brief provision providing that how the audit will commence and how the audit will be concluded. In this manner, they have just notified two forms, Form ADT1, which is the intimation of the intent to conduct audit, and ADT2, which is the intimation of conclusion of the audit and the audit observations there. Now, the powers to conduct audit has been notified in 65, but the power to access my registered premise is taken from section 71, whereby they have the powers to visit my location and check the records in my location instead of calling the records at their premises. And taking a cue from 65 and 71, the government thought it fit to issue a GST audit manual. It's kind of a standardized format and standardized manual, or you can state the SOPs, what the officers are supposed to do. Since these officers may be coming in from excise background, looking after only manufacturers, not service providers. Certain officers may be coming from service tax background, not looking after manufacturers. Certain officers may be coming from your VAT background. So the central government thought it fit to issue a GST audit manual in 2019, kind of standardizing the entire procedure and what are the different checkpoints as a guideline. This audit manual, friends, is in no way a completely exhaustive one. It is like an illustrative or indicative manual. So the officers may have the discretion to go beyond the audit manual as well, to check certain things which may not be indicated in the manual. From our experience, we have seen that the officers tend not to go against their own instructions or manuals unless the circumstance make it necessary in that fashion. So let us understand now the legal framework a little bit in detail. What is this legal framework? First and foremost thing, friends, the audit by tax authorities under section 65, for an audit to commence, the commissioner has to notify the audit or any officer which is authorized by the commissioner to notify the different audit whomsoever is to be audited. So the commissioner or any other officer authorized by the commissioner by way of a general or a specific order may undertake audit of any registered person. So first and foremost thing is that section 65 is applicable to your registered persons. Friends, there could be queries that if I am, let's say I'm not taking registration under GST for certain reasons, can the authorities come to my doorstep for audit? Generally, the answer for this question is that generally the officers do not come to a doorstep for audit if they feel, if the revenue at any point of time feels that, okay, fine, you should have taken registration and you should have paid the taxes. And since you have not taken registration, there could be a possibility of evasion of taxes or non-payment of taxes. It might be taken up by a jurisdiction officer or investigation wing or intelligence wing or anti-evasion wing. May not be taken by your audit wing of the revenue, because audit is conducted on registered persons. So the commissioner, by way of a general or specific order, can authorize the audit of a registered person for such period at such frequency, whatever he feels appropriate, they can prescribe by way of notification and rules. Now the officers referred in this above provision can conduct the audit at the location of the taxpayer, or they can also conduct the entire audit process in their own revenue offices. Friends, this specific provision of conducting audit at their own revenue offices was practically seen firsthand by us in the 2 years of pandemic, whereby the officers were not visiting the taxpayers' location due to maybe transport issues or the fear of COVID and all these things. Whereby all these officers have actually called for entire records, all the reconciliation, books of accounts, everything for verification in the revenue office, conducted the entire process of audit in the revenue office, not visited the auditee's premise even once. So they take the cue from this provision where they are empowered to conduct the entire audit in their own office itself. And I cannot exactly dispute and go over there that I will not bring all the books to you and you have to come over here. They are empowered to call all the books in their office itself. Now, before they come for an audit, the registered person or taxpayer has to be mandatorily informed by way of a notice of not less than 15 working days prior to the commencement of audit. So I need to have a notice of at least 15 working days. Friends, if we actually translate this would effectively give us 3 weeks time, almost like a 3 weeks time, because your revenue authorities follow a 5-day working schedule. So 15 working days would almost give you like more than 3 weeks time for you to prepare for an audit. Now, what should you do in those 3 weeks time when you get a notice for an audit? We'll be taking up in the later slides. Now, once the audit has been commenced, once it is commenced, we'll also come to what would be the scope and definition of the term commenced. Just they have informed that is that commencement. Once they have informed, I have given certain set of documents like my audited financial, is that commenced? Once they've started visiting my office, is that commenced? What is exactly commenced? We'll be coming to that as well. But once it has been commenced, the audit has to be mandatorily completed within a period of 3 months from the date of commencement. That is the provision. And in cases specifically where the revenue is not in a position to complete it within 3 months, the commissioner has to specifically record an order in writing, whereby he is putting forth the reasons why the audit could not be commenced within 3 months. Let's say they have commenced the audit today, and maybe a week or two later, the government announces another lockdown for some reasons. So this could be fit reasons for the commissioner to extend the audit as well. So in certain cases, they are authorized to extend these audit proceedings from 3 months to 6 months as well. Now, looking at what is the basic term commencement of an audit. So basically, it has been defined as the date on which records and other documents have been made available by me to the officer, or the actual institution of the audit at the place of business of the taxpayer, whichever comes later. So if I make it available today and they don't come to my doorstep for the next 2 months, or maybe next 3 months or 4 months also, I cannot go and argue over there that why haven't you commenced your audit and why should have been completed within 3 months. Because till the time they don't come to my premise, whichever is a later date. So that accordingly, that will be taken into a picture that if they're coming to my location at a later date, that will be taken as the date of commencement audit. In the reverse scenario, in the mirror image, where they come to my doorstep and still they find that documents were not available, and I seek time from the officers to provide the documents to them, and keep on seeking sometimes, sir, 1 mahina time do, 15 din ka time do, give me 1 week's time, just trying to buy some time so that at the very end they are very in a hurry to close the audit and maybe miss out certain points that I may be hiding. So again over here, even if they have visited my premises, but I have not given the documents, so the commencement will start from the day I provide the documents, which will happen later from the date of visitation of the premises. So whichever is later, they are supposed to complete it within 3 months. This may be the legal time limits, but friends, let me tell you, in a lot of cases, the audit report is not communicated to the taxpayer within the period of 3 months. They may physically stop visiting your premises. They may stop asking you for documentation, but the later on communication in form of audit objections, reply to audit objections, the draft audit report, your replies to the draft audit report, and the final audit report may take up maybe 5-6 months as well. So the revenue in such cases argues that we have completed our audit at your premise. Now you are not troubled beyond 3 months from the date we started. So that is the shelter that they try to take. Till the time we are not harassed exactly by these officers, it's better not to confront them with these statutory time limits. Only in cases where there is a frivolous demand and we are filing a writ petition, we could take up all these technical grounds as well. Now, during the course of my audit, the officer who is visiting my premise, he can ask me for a lot of things. I am obligated to provide him the necessary facilities to verify my books of accounts in the form that I cannot say there is no place in my office for you to sit and you cannot visit over here. I am mandated under section 65 to give him a proper facility whereby he can verify my books of accounts. The facilities may include a proper sitting place. It may include a computer system connected to the internet and whatnot it could be. So all these things I am supposed to give him the facility to verify, and also furnish the information which he may require and render assistance for timely completion of audit. So an audit job that is to be done by the tax authorities, I am supposed to give all the assistance. Now, friends, we all know the assistance comes in forms that whatever forms these officers need to fill in, lot of annexures and master reports and all these things, they just give it to us. That sir, आप ये पूरा भर के मुझे submit कर दो. Instead of they themselves filling it up, they pass on all these documents to us. We'll see what are different annexures, questionnaires that they ask us to fill up all these things in the form in the guise of this render assistance. Now, once the audit is concluded, the officer is supposed within 30 days supposed to inform the person whose records have been audited about his finding, his rights and obligations, and the reason for such findings. So basically, the audit objections, whatever the auditor has found out that these things prima facie appear to be incorrect, you're supposed to be paying certain more tax, or you should have not taken certain inputs, or you should have reversed certain inputs, you should have paid some taxes under reverse charge, you should have not claimed this refund proper, all these things. So all such audit objections is supposed to be informed to you within 30 days. And finally, wherever the audit is concluded and it results in detection of any tax, which is short paid, not paid, or erroneously refunded, or any input that is wrongly taken or utilized, the proper officer is obligated to inform me in writing that what are the different things that he has noticed as incorrect from my records. And after intimating, he'll initiate action in form of a demand notice under section 73 and 74 to me based on circumstances. Now, once they have got the powers under section 65 to conduct an audit, they further take the powers from section 71 to access my business premises. Now, if you see, the audit could be conducted by commissioner, but access to business premises, the authority to access the business premises, can be given even by a joint commissioner as well. And they have the powers to inspect. Friends, please note, the term used in section 71 is inspect. They have the powers to inspect my books of accounts. They have the powers to inspect my documents. They have the powers to inspect my computer program, computer software, whether installed in the computer or otherwise. In today's world, friends, if you see, in lot of cases, the softwares are not installed physically on the computer, they are cloud-based. So even if such softwares are not installed, but they're accessible through internet medium on a cloud platform, so I am obligated to give them access so that they can inspect all these computer softwares which are relevant to my books of accounts. And he has the powers to inspect all such other things whichever may be available at such place. Now, friends, all these things, whatever requires for the purpose of carrying out the audit, he has got the powers to inspect. One very common query or one very common issue that we face is that these officers at a lot of point of time ask for the soft copy or the tally backup or the software backups on a pen drive and ask us to share all those entire software backups to these officers. They may quote that you are obligated to give it to me by virtue of the audit and all these things. Look over here, the computer program, software, everything. I've got the powers to have a check on all these things. Now, friends, if you notice this provision 71, this is only giving them the power to access my place of business and to inspect. Does it give the power to these officers to take a copy or to seize such records? If they want to conduct any seizure, that's a different provision of the GST Act altogether. They need to come with proper forms for seizing such documentation of my computer records. So legally speaking, I may not be obligated to provide them the tally backups and all these things. But on a practical level, what happens is that when you are not giving them the backup, it could raise some flags. It could raise some doubts in the mind of the officers. Why are you not wanting to give your database. If you are a multinational or some company engaged in some research and development of a new product or something, that's what you could share that these are my corporate products or these are my confidential products, and we are not permitted to share send these outside our premises. And you could actually share what is your legitimate apprehension for not sending the soft copies of your softwares and your books of accounts, but simply denying them that we will not do, may not be advisable. Whatever apprehensions you have, legitimate apprehensions, in such cases, wherever these officers ask you for the soft copies and all these things, it's better that let us actually inform them, let us actually get them to understand what is the apprehension, why we are not giving them the software backups and everything on a pen drive or something that sort. We could all at the same time could always inform them that whatever ledger copies, whatever the extract of the books of accounts from such softwares they require, we are happy to give all these extracts in a printed format to them, maybe in a printed format or maybe in a pen drive in a PDF format as well. But giving the access to the complete software may have some lot of companies may have apprehension, whereby it's preferable to make them understand about the apprehension and the confidentiality issues as well, for them to actually appreciate the situation that you may be facing. Now, apart from inspecting all these documentations, I'm also obligated under the provisions of Section 71 to make available to my tax officer the records that I'm preparing as a part of my normal course of business, whatever records I'm preparing or maintaining, and what I may have declared to the officer. I have also required to make available the trial balance from my books of accounts or its equivalent. I'm also obligated to make available my audited financial statements, whether it may be audited or unaudited, both ways I'm required to give them the income tax return copies in case it is not audited, the cost audit report, the income tax audit report. So all these reports, all other relevant records, whatever has been maintained by a taxable person during a normal course of business, all such reports, if maintained, is supposed to be made available to the officer who is conducting an audit. Now, all these records are given to the audit party for their scrutiny. And there is a specified timeline that these records are to be given or made to be available within a period not exceeding 15 working days from the when the demand has been made. So in case you find you come across some officer who is maybe behind on his timelines, or maybe who is on a power trip, whereby he's asking 7 दिन में मुझे सब records चाहिए, I want all the records within 7 days at my desk, I want all the records within 3 days at my desk, if you don't give it to me, I'll initiate action and all these things. Instead of directly confronting, all that you have to simply do to handle such officers is softly and simply inform them that, sir, under Section 71, what you are asking for all these records, I'm provided with a statutory time limit of at least 15 working days to provide all these things to you. And friends, frankly speaking, there are records that have already prepared in my books, the trial balance that is already available in my software, my audited financial statements, whether audited or otherwise, my cost audit report or income tax audit report. All these things are generally very readily available with every registered taxpayer who is properly compliant with the law. So normally it's a 15 working day timeline that has been given by the government. And that is a very reasonable time limit for me to provide at least all these basic documentation. The other documentation in form of your input tax register, my GST return copies, printout of all these copies, my reconciliation statement and whatnot, reverse charge statement and all ththese things, GST 2A, 1, 3B, 9, 9C, all these other things, you may need, seek some time to download and provide a soft copy or a hard copy or whatever. But these other things are just available at a click of a button in the soft copy and hard copy format with all companies. So there should not be any actual issues for you to provide all this documentation to the audit party. Even in cases, let's say the taxpayer is on a year-end closing or month-end closing or in between some board meetings or something of that sort, and there is another deadline that is presently going on. So what is at least preferable that while I'm entertaining the other deadlines, instead of simply asking for more time, at least try and give certain very readily available documents like your audited financials to these audit officers. Make at least some submissions, if not everything. Kuch na kuch to de do, so at least it is not a complete non-cooperation from your end. You could always state that, sir, I'm enclosing document 1, 2, 3, document 4, 5, 6, I'll be submitting in the due course. And we request a certain time for all these things. Friends, when these tax officers intimate you that we are intending to come to your location to conduct an audit, it's not that they are actually wanting to be at your doorstep the very next day. From our experience, what we have seen, whenever the commissioner or the JC or some other authority takes out the audit list, it generally consists of at least 300 to 500 taxpayers in his jurisdiction itself. And to conduct an audit of such 300 to 500 taxpayers, there are almost like 10 or 15 audit groups. Each audit group has got 3 or 4 officers. These 3 or 4 officers are more or less generally divided into 2 teams. That एक team एक जगह जाती है, दूसरी team दूसरे officer पास जाती है. And each team has got at least a list of 20 to 50 taxpayers. So they are also burdened with a lot of paperwork. So it's not that just immediately after submission that the next day that they'll be at your doorstep. They could take their good own time of 1 month to 2 months to come to your doorstep. Sharing a live experience with you, friends, we had got an audit notice for one of our taxpayers back in February end, where we are filing tied up with the GST audits, GST 9C that we had to file. After submission of these basic documents of trial balance and annual financial statements, the income tax audit report, we haven't heard back from the auditor, the departmental officer, for the past 2 months. Because these officers are anyhow overburdened with their existing or the old pending work, and they haven't found the time to come back to us. Possibly where they haven't found the time to come back to us is that a fact that we were very prompt in submitting all our documentation what were required by them. Instead of seeking time, as soon as we got the intimation of audit, the immediate submission of all these documentation gives a kind of a feeling, could possibly give a feeling to this tax officer, is that, okay, I have just intimated this guy on the 7th of May, and on 10th of May, he has already made available all these documents. Maybe he doesn't have something to hide. So always seeking time, keep on seeking time, may raise some flags, may raise some doubts. And instead of seeking time, if we are prompt in giving all this documentation, that may go a long way, especially if the audit results into litigation, whereby you would have a good case to argue before the honorable courts that I have been very cooperative from the very beginning. There has been no attempt at my end to delay the proceedings of audit, and I've been very prompt in submission of all these documentation as well. So whereby you could make a good case that there was no intention to evade taxes. Had I had any intention to evade taxes, I would have not given the documentation very promptly. I would have tried to delay my proceedings and all these things. So all these things become a factor for you when you are litigating later on in the courts. Now, friends, the procedure of audit as put forth in your rule 101 of your GST rules.
Sumit sir,
Yes.
I have some question regarding visiting of officer.
Yes, please.
Like, can officer visit residential premises of partner or director even if such places is not place of business?
No, absolutely not, sir.
No. Okay. Another one, access to place of business is mentioned. So officer cannot visit residence. Is it right?
They cannot visit residence if that residence is added as a place of business or an additional place of business. They would have a reason to visit them, such residential premises. Other than that, if it is not mentioned as a place of business in my registration, they have got no reason to visit my residential premises.
Okay. If place of business is closed by more than 3 months, then also they can't visit.
No, sir. In such cases, generally what they are engaged into is that they call up the SSCs and ask for the records at the revenue office. And in such cases where even you are not providing the records or not opening up your office or not giving valid reasons for the non-functioning of your office. So in such cases are transferred to your investigation wings and your search wings, who have the powers to visit even your registered premises or your residential premise as well to seize your books of accounts, which they doubt have been stored in such residential premise with the intent to evade taxes. So such visitation is undertaken by different wing, not by the audit wing.
And for appearing in front of the officer, whether a chartered accountant is need a practitioner certificate to appear on behalf of client.
So your appearance before the tax officer comes into picture once a demand has been made. Before that, it's just coordination. Practically, in the 14 years of my experience, what I have seen that these tax officers have no point of time asked for the authority letter. That who are you, Praveen, to come over here and submit all this documentation. These authority letters are required once the audit objections or the show cause notice may have been issued. So basically, how we go about is that they are intimating that I'm coming for an audit. You may, as a chartered accountant, go to their premise with the entire books of accounts or whatever documentation they are required, and you will be submitting it over there. So that submission can be made by you, the accountant of the company, by the director of the company, or you can even send all this documentation by post. The postman does not hold an authority over you. You're just the communication guy who is coming over there to submit the documentation. So for mere submission, making a written submission, you would need not hold any authority letter. But once you are making certain oral clarifications, you are making some oral submissions, and your submissions are being taken on the record. At that point of time, we need to present your authorization letters that I have been authorized by my client to appear before you and make oral submissions on his behalf, which will be binding upon my taxpayer.
Okay.
So this comes into picture when you're making oral statements. Oral statements generally are not recorded in course of your audit. Your statement recording is taken in case of your assessment and scrutinies and investigation, search and seizures, not during the course of audit, sir.
Okay, sir. Continue, sir.
Okay, thank you. So now, friends, coming to the procedure of the audit. The audit can be conducted for entire financial year or a part thereof also, or multiples of financial year also. Why the term part thereof has been used, friends? If we see financial year 17-18, GST was there only for July to March 2018. That was just 9 months out of 12 months. For such cases, there could be instances where taxpayer may want to challenge that you cannot audit 17-18 completely. 17-18 का first 3 months are in service tax era. आप सिर्फ 9 months का audit करने का provision नहीं है, and पूरे साल का आपके पास GST audit में powers नहीं है. So to approve in such cases, they are put for that, okay, I can conduct an audit for entire financial year or a part thereof, or even multiples of financial year. Instead of 17-18, I'll conduct audit for 2 years or 3 years or 4 years altogether. So they have got the powers to conduct audit in such manner. And wherever it is decided by the revenue to undertake audit, the officer is obligated to issue a notice to me in form ADT1 specifically. And the officer who is authorized to conduct this audited, along with all this team of officers accompanying such a authorized person, is supposed to verify the documents on the basis of which I maintain my books, I have filed my returns, I filed my statements under the GST Act. He's supposed to verify the correctness of the turnover, the exemptions, or the deductions claim. So in such case of your pure agents, wherever you're claiming reimbursement of expenditure and claiming deductions from your taxable values, so all such deductions or exemptions, all these things can be verified by these officers. The rate of tax that I have applied in respect of such supplies, whether it is the correct rate or not, the input tax that I've availed and utilized, whether it is proper or not, the refund that I've claimed, is it proper or not, and whatever other relevant issues and records are there. So he's supposed to record all the observation in his audit notes. Now, once he goes through my entire books, he has to issue a proper audit objection letter. This audit objection letter, friends, cannot be a verbal audit objection कि आप मैं बोल रहा हूँ, you write it down by yourself and give me your replies. Friends, the GST audit manual specifically obligates the audit team to give their audit objection in writing. So you may always insist that, sir, whatever is your audit objection, you please put it forth to me in writing. It may or may not be exhaustive, but you may always insist that whatever is your audit objection, please give it to me in writing. I am not a person who understand all these things and I will remember all such things. आपके जो भी points है आप उसको writing में दे दीजिए. We'll submit our reply to such audit objections. And once I file my reply, the officer has to finalize his findings of the audit objection after due consideration of the reply first. This is, friends, where a lot of issues comes into play. Whether actually the final audit report is issued after due consideration of my reply or not. More often than not, out of experience, we would have seen that once the revenue has issued an audit objection, very seldom does it get dropped and an audit para is not issued on such objections. More or less, once they issue the audit objections formally to you, it results into a audit para and subsequently a demand unless until the same is paid off by you along with interest and everything. So although the officers are obligated to do all these things, they simply pass off your replies, your detailed reply with statutory backings, with your case laws and all these things, with a simple thing that, with a simple one-liner answer that the reply submitted by taxpayer is not acceptable to the revenue. Why is it not acceptable? What are their cross objections? What are their cross findings? What are their rejoinders? You do not find all these reasonings in the audit paras. They simply put for that it's not acceptable to you. Friends, such an attitude of writing this observation, this reply is not acceptable, itself should not be acceptable under the provisions of law. There's a good chance that the courts would give you relief. It's if such kind of audit report have been given, at least the courts have been giving relief for such cases where the final order, assessment order or the demand order has been made in such manner. So what we should request after filing our reply to the audit objection is that, sir, whatever is your final viewpoint, we request you to please draft a speaking audit report. The way they are supposed to and obligated to draft a speaking order against a demand notice. We simply should again mention that you please put forth your detailed reasonings and issue a speaking audit report, which shall help us also analyze why our replies are not acceptable to you, and maybe it might give us a reason to pay off the taxes later on at a later stage. Maybe we may not have understood it in the first instance, but after our cross objections, if you have certain more points to add, we request you to put forth all your reasonings and objections and your rejoinders in your audit report so that it may help us to understand the perspective of the revenue in a better manner. So it's preferable to always be humble and be respectful while our submissions are being made. All such things go a long way once you are litigating all these demands in the courts. Is that how you have cooperated? What have you submitted before these officers? Have you asked for all these things to be considered or not? So all these things become important once you start to litigate these things. Now, finally, once my consideration has been considered, once my reply has been considered by the revenue officials, they are supposed to issue me a detailed audit report, the summary of which is in form ADT02. And along with that, they give a detailed observation report in their own format. Now, friends, what are the different documentation? What are the different things that these officers require you of? First and foremost thing that their common requirements that consist of is what is your nature of activity? what do you do for your business? क्या करते क्या है? Just by your name or by your GST returns, these officers may not have got any idea what you are actually doing. So the first and foremost thing require what is your detailed nature of activity, whether you're providing exports, whether you're providing taxable services, whether you're providing exempted services and whatnot. What kind of different licensing work that you do, what are different things that is engaged on the ground level for you to generate your revenue, all these things. They may also want to understand your organization structure in the form who are the directors or who are the stakeholders, who is responsible for the GST tax compliance, who is responsible for the record keeping, who is responsible for the accounting, everything, so that they can ask the relevant question to the relevant person and they can get the proper records in that fashion. They also ask for your trial balance, as we've already seen, the trial balance, audited statements. Now, your trial balance and audited financial statements may be prepared in case of multi-locational entities. These statements may be prepared on a pan-India level. So they would also ask for the state-wise breakups, and they prefer that if you get a state-wise trial balance as well, it's preferable for these auditors to conduct an audit. Since your audited financial statement will be considered on a pan-India basis, may not be maintained on the GST and wise basis. So these state-wise breakups help you. These state-wise breakups of your figures would already have been made available by your GST consultant while preparing your GST 9 and 9C. So whatever is your working files, which you are in a position to share. And before sharing such soft copies or your working files, it's preferable to have a proofread of all these documentation that you are sharing, because things which are once shared cannot be unshared. There was saying, Hindi मुहावरा था, ज़बान से निकली बात वापस नहीं आ सकती है. Similarly, whatever information, whatever details you have already given to these officers cannot be taken back by you. So always preferable to check all your details, what you are submitting, whether it's updated or not, whether it is finalized or not, whether it is in further amendment that was taken care or not. All these things. Thereafter, your GSTR 1, 2A, 3B, 9, 9C, all these kind of your details from your GST portal. Friends, we may be wondering that these are GST officers. All these details, GSTR 1, 2A, 3B, इनको portal पे दिख जाएगा, हमसे क्यों मांगते हैं? Friends, two reasons for this is that at a lot of times, the audit wing is not given access to your return records. Your access to your returns, GST 1, 2A, 3B, may be available with your jurisdiction officer, and your audit officer may be different. And he may not have the access to all these returns that you have filed. That is where they may ask for the soft copy or the hard copies of your records. Along with this thing, they will also ask for the reconciliation of your taxable turnover, of your tax paid under forward charge or reverse charge, reconciliation of your inputs. They will also ask for the input tax register. So whatever input tax credits that you have availed, they would ask for the invoice-wise details in a specific format, which already has been given in the GST audit manual. These formats will be also shared by these tax authorities. So basically, this will entail your invoice number, invoice date, name of the party, GST of the party, what is the nature of the expenditure, what is the taxable value, what is the tax amount thereon, what is the place of supply, whether these expenses are in respect of a business or are these personal expenses. And finally, they would also ask for the date of payment of these invoices. The two fundamental things that they want to check from your input ITC register is that whether you are eligible to claim the inputs or there is some blockade as well. Second thing, whether you have made the payment to your vendors within the statutory prescribed time limit of 180 days or not. So preparing other things, your invoice wise, your invoice number, invoice dates and all these things is very easy, but to map your date of payment for against each and every invoice would become very difficult, especially if you are engaged in making on-account payments to your vendors. So that becomes a difficult task, but it is always preferable that in the taxpayer maintains these details on a continuous basis, because as a prudent consultant to these taxpayers, it would always be advisable that you also check certain these things like your payment within 180 days or not. as a prudent professional and a valuable advisor to your clients. So if these details are already maintained by the taxpayer, you would have no issues to submit these things. Along with your input register, they would also ask for the reverse charge workings. What are different categories of services or goods on which you are paid reverse charge GST, and what is the reconciliation of that with your audit books of accounts. They would also ask for copies of electronic cash ledger, credit ledger, and finally, a big questionnaire that has been prescribed in the GST audit manual. Friends, this questionnaire, a lot of times there's a argument in our industry is that whether we are supposed to fill this questionnaire or is the revenue official supposed to fill this question. To answer this query, I just like to recall a line that I read in my previous slide, that the taxpayer is supposed to render assistance to the authorities for the conducting of audit. So although it may be the duty and the job of the tax officer to prepare this questionnaire, it's preferable that if you fill the questionnaire, at least there are good chances that some wrong information is not recorded by the tax office. Otherwise, we don't have control over what typing mistakes, what issues, what wrong answers these officers may write in their records. So it is always preferable that, yes, we prepare the questionnaire and submit the questionnaire to the best of our knowledge. Whenever submitting these questionnaires, you could always put a disclaimer in your covering letters that all these answers, what we have given, is to the best of our knowledge and understanding. Now, friends, a very important element that we should always keep in our mind is that whatever submissions of these requirements that we are making to these officers, always and always submit these things in the department under the covering letter. Because let's say today I submit these documents in the department and they don't come to my doorstep for next 2 years. And after 2 years, once they are nearing their deadline to issue the show cause notices, they come to my doorstep, hurry me up and allege that I have not cooperated with these officers, and they allege suppression with the intent to evade payment of taxes. This covering letter that I may have submitted 2 years ago with stating the different documentation, different details that I'm giving to these officers would come to my help and my defense while I'm defending my position that there was no intent to evade payment of taxes. So always submit all these documentations under the covering letter, and these covering letter may or may not be accepted by revenue while they're already in your premises. That is where on the first instance I advised you that before they come to your doorstep, submit these documents to them already. You may have to do a double job of already taking a Xeroxes and submitting it over there and making all these documents available all over again in your own premises. But friends, the cost of those preparing the 2 sets of documentation would be much less than the cost of litigation that may come in the coming months. So that is where it's preferable that you submit all your submissions under the covering letter, get it acknowledged by the officers. Now, friends, let us see what is the basic questionnaire that they asked for and what are details that is asked in all these things. So, friends, the GST audit manual issued by the government, specifically in Annexure 6, they have given 2 sets of questionnaire. One is for the goods sector, one is for the services sector. I have just given a heading under which there may be different questions. The questions may be 40, 50, 60 questions that they've asked. I have just given you basic headings. Let me just take you to the brief questionnaire. I hope the questionnaire is visible to all.
Yes, sir.
Yes. Questionnaire Annexure 6 is visible. Yeah. So if you see on purchases side, they're asking various questions, whether all purchases centralized, they are decentralized, whether purchases are authorized by persons like your owner or managing director, whether purchases are backed by purchase order or not, whether there is a system of authorized vendor list on all these things. So they'll issue this standard questionnaire without any modifications to you. You just have to give your short answers to all these questions. These questions on your inward supplies, your outward supplies, There would be questions on your stores, how the records are maintained for the stock that is maintained at your premises at maybe multiple branches across the state, how you're accounting for the GST, how you're ensuring that the entire GST is recorded properly in your books of accounts or not, for your inward as well as outward front, whether you're engaged in job work, sending goods to a job worker or not, whether you're filing ITC forms or not, all these things. So all these questions give them an indication what areas they should concentrate upon. Similar questions are there for your service sector also, whereby they give out this format to you that you fill in your details, your master details, whatever you're making, taxable supplies, inward supplies, exempt supplies, export supplies, inputs that you're taking, what is your invoicing pattern, how are you in issuing invoices, are there different heads of invoices, different series of invoices or not, are reimbursements part of your invoicing or not, how you're maintaining your records, similar to your goods sector, how you're making your GST returns, how do you determine the place of supply for services, whether you're engaged in zero rate supplies exports or not, whether there is in case of inclusion of any valuation as per valuation rules or not. So all these aspects, they ask for your answers on all these things, whereby instead of dictating these answers to them or informing these answers and hoping that they remember the correct answers and type their correct answers in their records, it's preferable that we have all the time in the world. Let us type out, let us give our answers to them as per our submissions. And at least when we make certain these submissions of questionnaire as well, that could also again form part of your defense. That yes, I have given all this correct information. If the revenue is not understanding all these things, then if revenue has not taken the correct details on the record, then I cannot do much on that front, but at least you have your submissions on the record. So such kind of questionnaires are there. Now, friends, coming to the basic intent of our session, what are the different issues that are raised by the tax officers? What is our way forward and how to handle such issues? So what I've done, friends, is divided the issues into three limbs majorly, is your outward supplies, your inward supply, and your reverse charge. Friends, the first and foremost thing to watch out for, where they raise these flags, you as a GST consultant may or may not have given such much emphasis to the notes of accounts of your audited financials. But at least in case of your companies, where the balance sheets P&L is annexed with the detailed notes of accounts, and different notes, different disclaimers are given by the statutory auditor in these notes of accounts. There are a lot of reportings, a lot of different things that we are doing under the Companies Act, or maybe under the Income Tax Act, or maybe as per the accounting standard issued by ICI, or by the India standards that are issued by ICI, which requires to report a lot of things in our books of accounts. One of them is your related party transactions. So even if someone is thinking of not giving the correct answers in the questionnaire, I would like to suppress certain related party information. Friends, there would be no point in suppressing that, because the auditors would have access to what are your different related parties and what is the amount that you are paid or received from these parties, your related parties, from your notes to accounts, which your auditor has already reported. So already he would have access to all these things. So there is no point in trying to evade such questions. At the same time, before submitting your notes to accounts, it is always advisable that you should review your tax positions that you have taken, the reasoning behind such tax position, and your workings with respect to your valuation, time of supply, and all taxabilities and everything. If you have taken any written opinion from consultants or advocates, keep all these opinions readily available with you, that these related party transactions were treated in a certain manner due to so and so reasons, and that is why so and so tax was paid or not paid, or appropriately deposited at a later time or not. You also report your earnings in forex, so they would like to cross match that with your zero rated supplies or your export supplies that you're reporting in your books in your GST records and cross match that from the details of your export remittances received in Forex from your notes to accounts. Now, friends, the issue that comes into play is majorly a lot of people would reconcile your revenue from operations, your main revenue, but may not have given so much emphasis to your other incomes. A lot of places, the auditors may not have given so much emphasis that whether the GST hasn't paid on other income or not, or whether it is payable or not. The GST consultant may be not be aware of the other income because the client has not shared all those things. So your other income could consist of various elements like your notice pay recovery from your employees who may have left employment earlier before serving the actual notice period. There may be some recovery of damages or forfeitures, all these things that you may have recovered from your vendors or your suppliers and customers. There could be write back of your creditor amount. There could be forfeiture of advances. All these other incomes, what we have seen in our experience is they tend to get ignored while you're computing your GST liabilities. I'm not saying that all these items attract GST, but while you have not paid the GST on all such items, you should be also at the same time be ready with an explanation and with a proper backing of the legislation that GST is not applicable on certain things. Most popular among the GST auditors is the notice pay, whereby they try to invoke provisions of Schedule 2 and state that this is amounting to tolerating an act and all these things. Friends, let us now be relaxed, is that your Madhya Pradesh Appellate Authority for Advanced Rulings, Madhya Pradesh AAAR, has given a favorable ruling in the taxpayers' favor in case of Bharat Oman refineries reported in 2021 12 TMI 999, whereby the Appellate Authority for Advanced Ruling has specifically held your notice pay recovery is not liable to GST, and it's a kind of a subset of your transaction of your Schedule 3 services given by your employee to your employer only. It's emanating out of that original Schedule 3 transaction only, and therefore this notice pay is not taxable. While giving this ruling, they have also dealt with the implication of Schedule 2, tolerating an act also, and a welcome AAR whereby they have appreciated a Madras High Court judgment of service tax era on a similar issue of notice pay in case of GE and TD reported in 35 GST Law Times 89 Madras High Court, whereby the Madhya Pradesh Appellate Authority for Advanced Rulings has appreciated the service tax case and has rightfully held that there is no material change or there is no material change of analogy in the declared services in service tax era or the Schedule 2 in GST era. And the way Madras High Court in the service tax case has held that notice pay was not liable to service tax, similarly, the Appellate Authority in Madhya Pradesh have held that there won't be any GST applicable on notice pay recoveries also. So very rare and welcome judgment from Appellate Authority or Advanced Ruling. I believe this is what is called handling these officers, that somehow or the other you manage to get a favorable ruling by way of your detailed submissions or your good arguments and good research work that you have undertaken, and maybe something else that we may not exactly be aware of. Similarly, friends, in case of damages also, certain damages that you recover by virtue of your breach of contracts or something else. So a similar case was there in service tax also, Steel Authority of India, whereby the Chennai Tribunal has held that accepting the amount of damages does not amount to tolerating an act. It is not liable for service tax. Similar arguments can be taken by you before the GST authorities also to claim that damages are not liable for GST. Friends, while I'm quoting these judgments to you, and we just need to ensure certain fact that the facts of these cases, the circumstances of these judgments also have to match your own facts. If there is a separate agreement for settlement of out of court case or something that sort, whereby you're post facto accepting the damages, the recovery of damages, all these things, that may amount to a supply under GST. But the basic provision given in your original contract to prevent a breach of contract with the intent that the contract should not be breached, in those lights, these judgments have been given by the honorable courts in service tax era and maybe in GST era also. So we should not just blindly think and go to our clients that notice paper tax nahi lagega, damages per tax nahi lagega. So एक certain situations में certain conditions पे ये judgments दिए हुए रहते हैं, and if the facts differ from the facts of those cases, the arguments and the final outcome of the case may also differ. Friends, apart from damages on the creditor write-backs, amount that was payable to the creditor, which I have not paid, maybe the ledgers have been settled, since I've already claimed that amount as an expenditure in my previous year, and since I'm no longer going to pay off that amount to my creditor, I may have to write back that amount as an income of accounts. Friends, while this write back may not attract GST, but you need to be aware of other provision is that if you have not made payment to your GST creditor against an inward taxable supply, you may have to reverse the input tax that you may have taken on that inward supply. Similarly, there may have been issue of forfeiture of advances, whereby you may have already paid the GST on receipt of advance, and therefore, since the contract could not proceed ahead and that advance was forfeited by me, thereby I am not liable to pay the GST on it, forfeiture of the advance all over again. So all these things, all your arguments, whatever differences that you're taking, if you have already paid the tax in certain circumstances, agar aapne pehle bhar diya hai, so all these things need to be documented very specifically in all before making these submissions. That is where it's preferable that you be prepared on all these aspects also. Friends, we also have in a lot of companies the cases of unbilled revenue. Just to state our books of accounts at the correct top line or the correct turnovers, we also account for the unbilled revenue. Revenue accrued but not due to me yet. So the work that may have been executed by me, I have recorded for that in my books of accounts, but still the payment is not due by the customer to me. In such cases, we have to make the audit team understand that this accounting is merely done to state my books of accounts at the correct values for my income tax or my Companies Act compliance purposes or my accounting standard compliance purpose or my Ind AS account compliance purposes. And there is no right conferred on me to raise invoice on 31st March of that end of the financial year for that unbilled revenue amount. So since there is no right that has been made available to me to raise an invoice, that unbilled revenue is not taxable under GST yet. You would also make these the audit party understand that this unbilled revenue has been reversed on the 1st April of the next year, and possibly you would have issued the invoice in the April of the next financial year. So you could always argue before these officers that under section 31, I am authorized to issue invoices within 30 days of completion of service. So even if the revenue assumes that the service was completed on 31st March, still the law gives me a time of 30 days to issue a formal invoice. So I'm always within my rights to issue a formal invoice to my customer by 30th of April also. In case of continuous supply of services, in case of construction contracts, long-term contracts, you could also take shelter under section 31(5) of the GST Act, whereby it is very specifically provided that the event obligating the customer to make payment to me has not yet arisen, the due date of payment has not yet arisen, Hence, I am not required to issue my invoice just yet. And since I'm not required to issue my invoice under GST yet, there is no liability of GST on this revenue that I may have accounted in my books, but the billing for such revenue has not been done by me. Friends, another issue that we have is the credit notes that we issue against our sales. Friends, the issue that comes into play, the audit party may not exactly raise the issue that whether there was a provision in your agreement for issuance of credit note and giving discounts and whatnot. The secondary issue that they actually raise is that prove it to me that your customer has reduced his input tax also. And such proving becomes even more difficult when the goods are returned altogether completely and they are rejected by the customer. So what happens is that I have issued an invoice to my customer. The customer, before even acceptance of the goods, has rejected it altogether. So he has not accounted for my invoice in his books. And accordingly, he has not taken input tax. And since the customer has not taken any input tax, he has not reversed any input tax. So it becomes very difficult for us to explain to these officers, sir, unless and until my recipient has taken the input, how would he going to reverse? And how am I supposed to give you the evidence that he has actually reversed? In cases where the officers are still unwilling to understand, at least for your past years right up to March 2022, you could simply take a shelter under legal provision. Is that section 43 read with rule 74 of GST obligates the revenue to issue you form MIS1 for the mismatches. So there is a clear-cut procedure prescribed in the law, is that when I am declaring a reduction in my output tax liability by virtue of any credit notes, and the same is allegedly not found as a reduction in input tax by my customer, and there's a mismatch between our records, the revenue is obligated to issue me form MIS1, mismatch 1 form. Friends, this MIS1 form has never seen the light of the day because GSTR 2 has never come. There's only GSTR 2A, 2B, maybe in few years we might have 2C and 2D, but the basic GSTR 2 has never seen the light of the day. That is where this MIS1 form has never come to us. So even if the officers want to argue that sir, section 43 is already been omitted in by the Finance Act 2022, you would simply ask them, sir, has it still that omission, has it still been notified, and what is the effective date of that notification for that omission of section 43? So till that time that section 43 was in force, you always have a shelter. Another aspect, friends, is that your rule 74 under your GST rules has still not been omitted by the government. So it is still there in place. Even if you're having your audits today, you are still well within your rights to quote your section 43 and rule 74 to state that, okay, if I am liable to give you the evidences for the reduction of the input tax by my customer, then issue me form MIS1. Let us follow the procedure prescribed in the law. There is a specific procedure. Has the revenue followed that procedure? If not, then why should I be unjustly denied my benefits? Friends, coming to your second limb of your inward supplies, the most popular of these issues emanate from the differences between GSTR 2A and 3B. Friends, we all have seen the different challenges that we are facing from these tax authorities during course of scrutiny or your investigation or audit. That's your GSTR 2A is not matching with your GSTR 3B. Even better, they go to the extent of stating your table 8 of GSTR 9, which is a static figure. They refer to that table 8 only and state that it is not matching with your GSTR 3B. And under rule 36(4), we will deny you all these input tax credits and everything. While they are doing so, they do not appreciate that during 17-18 or 18-19 or right up till October 2019, there was no rule 36(4) restricting my availment of input tax only to the extent of GSTR 2A, a certain percentage of GSTR 2A. Even after 36.4 has been introduced, there is a challenge that has been going on, whether 36.4 is ultra vires the GST Act itself, and whether the GST Act is empowering the government to issue rules to restrict my input tax availment or not. Friends, in this regard, it is very important to note that the government had inserted section 16(2) clause AA in your GST Act to restrict all your GST input tax availment as per your GSTR 2A and 2B. But even that 16(2) AA has not been made effective yet. So it was made effective, this 16(2) AA was made effective only from 1st January 2022 onwards. Before 1st January 2022, there was no provision whereby the government could give the powers to Rule 36(4) to restrict my input tax. It is only from 1st January 2022 onwards that they can mandate a compulsory verification, 100% verification of the invoice as per GST 2B and 3B, the matching of the invoices. Even after 16(2) AA has been issued, friends, we are expecting that there could be relief given by the courts in future, whereby they read down 16(2) AA, stating that it's impossible for a receiver to ensure that the details are uploaded by the supplier. So government cannot put an impossible condition upon me for me to give any benefits to me. Similarly, your section 43A, which was introduced in GST Act, not made effective, and before even it could have been made effective, it has been omitted again from your GST Act itself. Friends, in this regard, there are three things more that we could take note of for your GST 2A and 3B. Is that your Maharashtra State GST Department, your state GST department has issued an internal circular number 2A in February 2022, whereby the Commissioner of Maharashtra State has given the methodologies and the situations whereby the differences in GSTR 2A and your input as per GSTR 3B could be reconciled, and the audit team or the verification team could allow it. So although it's an internal circular issued by the state GST authorities, so these circulars could be quoted by us, at least with the state GST auditors. And the second question that before anyone types in the chat box is that, sir, whether we can use this circular to before the central authorities or not, whether they will accept it or not. Friends, honestly speaking, the central authorities may not accept the circular issued by the state commissioner. But before you face such issues, WRC has already been in talks before these authorities and are planning to put forth a representation for the consideration by the appropriate authorities, that since this is a beneficial circular given by one GST authority applicable in the entire state of Maharashtra, and the law is same under state GST and central GST, the central GST of authorities or the CBIC should also issue a parallel circular accepting these clarifications. So we are already in that process. In the meanwhile, when till the time these circulars are not issued by the central authorities, there are two other judgments of Chhattisgarh High Court and Madras High Court. One in case of Bharat Aluminium Company Limited, and the other in case of DY Beetal, whereby the courts have given relief to the taxpayers that unless until the department first tries to make a recovery from my erring supplier who has possibly not paid the taxes or not filed his returns correctly. So the revenue is first supposed to penalize my supplier. And in the event that he is not traceable, he is absconding or something of that sort, in such cases that they could come back to me and recover the taxes from me. So I, as a receiver, I as a buyer should not be made the first scapegoat for recovery of these taxes, just because it is convenient. Similar judgments is expected from a lot of other courts as well. Although revenue may not accept it, but it gives you good backing while you are fighting it out in the courts. Friends, as we discussed earlier, your input tax register. So a major issue that comes into play is the payment to vendors within 180 days. Friends, this is the absolute condition without any discretion to these tax officers. You may try to argue, sir, during 2021, there was COVID, we didn't have the finances, we could not make the payment to our vendors within 180 days. And in fact, the vendors have also allowed us more grace period and everything. Since your commercial agreement may have given you more time to make payment to vendors, but sadly, there was no corresponding further period granted by the government for you to make payment to vendors apart from the 180 days already that has been prescribed. So in such cases where you have not paid the tax amount and the basic value to your vendors within 180 days, the revenue would ask you to reverse your input tax in such cases. Friends, the next part the audit team focuses on is your block credits. Whether you have taken credits on maybe motor vehicles, maybe on food and beverages, maybe on employee expenses, maybe on construction, maybe on works contract, maybe repair maintenance, maybe on gift free samples and all such kind of things. So the focus is on whether your personal expenditure has it been camouflaged as a business expenditure also or not. When they are checking your input tax, that could be possibly on your personal expenditure. Because a lot of times there is a tendency among Indian taxpayers that घर पे एक डेस्कटॉप सिस्टम लिया बच्चे के लिए, घर पे एक लैपटॉप लिया था बच्चे के स्कूल के लिए, उसको कंपनी की बुक्स में एक्सपेंड आउट कर देते, उस पे इनपुट टैक्स जीएसटी भी ले देते बेनिफिट. Friends, while these taxpayers are engaged in certain all these activities and we may not be supportive of those, but before submission of these documentation before the audit party, it's very crucial for us to ensure that whether such capital assets or which have been put forth as a company asset, are they recorded in the fixed asset register of the books of accounts or not, and what is the location of such fixed assets. So even if the taxpayer is still wanting to continue to claim the GST ITC, at least we should try and ensure that that particular laptop is in the office premises during the visits of the tax audit party itself at least. So whatever items which could be compositely used by you maybe in your business or your personal expenditure, or which is actually business expenditure but wrongly classified by the revenue authorities, by your audit parties as your personal expenditure. Your expenses like your hotel stay, they could argue that, sir, this could have been your holiday stay. How should I consider that this is my business expenditure? Such cases, you come out why I visited that particular location. There was a prospective customer. You can show email records to show that, yes, I was communicating with that customer. You could have WhatsApp records to show that there was a prospective sample dispatches. There was a conference that was held over there. There was a meeting held over there. Subsequently, I made a sales over there, possibly or not, all these kind of things. This is where you could justify your expenditures on your hotel stays to show that this is a business trip and not a personal trip that you have taken. Friends, now in cases of taxpayers who are engaged in taxable supplies as well as exempted supplies, an important element that comes into play is the apportionment of your input tax. Proportionate input tax towards your taxable supplies and proportionate input tax for your exempted supplies, which need to be reversed. So although the revenue officials may not want to actually prepare the working altogether, it's preferable that the taxpayer keeps the already prepared working on basis of which you may have reversed the input tax. Keep it ready for the verification. Friends, out of experience, what we have seen, if you have actually not done any apportionment, if you have not done any reversal, the revenue officers are very high-handed to prepare when they are preparing their own working. They want a big chunk of reversal. But if there is a reversal of input tax that has been already undertaken by you, and it's on a reasonable and a legal basis, they generally refrain from going into very nitty-gritties of invoice-wise level verification, all these things. So if your workings are reasonable, they are legally sound, then yes, the officers may just have a quick glance at it, may just skim through all these workings and go ahead with the next issue. So all such items even if you have not done at the time of finalizing your books of accounts or filing your 99C, before the audit party visits your location, preferable to make the workings, keep it ready. Because whenever the revenue is going to make any working, it's always going to be in the best interest of the revenue. It is always going to be in the higher side. When you make working yourself, you would always try to optimize the working to give the correct tax and the correct reversal figures of your input tax. Friends, while they are undertaking your GST audit, we also seen the tendency of the audit party to verify your Tran-1 credits as well. Friends, Tran-1 amount, transition credit, is not exactly an input tax credit that you have availed. It's an amount that is credited to your electronic credit ledger. If you see under section 140 or 141, 142, nowhere they are mentioning that this transition credit is an input tax credit. They are always stating that this amount will be credited to your electronic credit ledger. And the way they have defined the term input tax credit, it is GST charged on your inward supplies or your reverse charge. So Tran-1 credit, although does not form part of your inputs, but as a part of overall compliance with the GST law, the revenue officials would be within their powers to verify your transition credit if it has not already been verified. Lot of cases, friends, the transition credit where it was more than 50 lakhs or 1 crore, or maybe where the transition credit was suddenly gone up by a good percentage compared to previous availments. So in such cases, the jurisdictional officers have already undertaken the verification of Tran-1 and issued your Tran-1 verification report. In all such cases, you may wish to give that verification report itself to the audit party. And after having a quick go through over there, they may not wish to go any further details for all such cases. The next aspect, friends, is the credit notes that you have received from your vendors. Two biggest challenges, friends, over here. The credit notes which are genuinely you have taken input tax and you have not reversed, it is supposed to be reversed. But the challenges that we are facing for credit notes that we have received is on two phases. One, where I have not taken the input itself, I have not taken the input tax credit, so how would I reverse it? So to convince these officers, while you're giving your input tax register, you could always show, sir, in the month where this invoice was supposedly issued on me and received by me, have I taken that input tax? There is an excess input tax in my 2A and I've taken less input tax in my 3B. And hence, since when the credit note was issued, I was not supposed to reverse it. You give your submissions along with your detailed evidences. Second case where you would have these credit note issues is that, yes, I have taken the input tax. I have made the payment to the vendor, and the vendor, instead of issuing credit note to someone else, has uploaded that credit note under my GST and mistakenly, and the vendor has not rectified his mistake. This becomes a very precarious scenario and could only be resolved possibly by your ledger's confirmation with your vendor to state that, sir, see, this is the invoice of 100 plus 18 rupee GST that I had got. I have already paid the 118 to him through my bank account. There is no general voucher adjustment. And this credit note that has been issued by my vendor, this has been mistakenly issued, and there is no mention of that in my books of accounts. There is no further remittance for excess payment that I have made to him that has been received back by me. So why should I be liable to reverse? And along with your such explanations, you could always give a letter from your vendor stating that this credit note was mistakenly uploaded under your GSTIN, and since the time limit has passed, then these vendors are not in a position to reverse or amend that credit note in their GSTR ones. Friends, coming to the next limb of your reverse charge mechanisms. A big issue that comes into play, and very recently, just today itself, the invoices of my inward supply have been mistakenly, the invoice of my inward supply on which the vendor had charged GST to me, he has recovered GST from me, has been reported as a reverse charge supply in the vendor's GSTR1 and now appearing as a reverse charge liability in my GSTR 2A and 2B. And basis of that, the revenue is insisting that I should discharge my reverse charge liability. Friends, you would not believe, I've just got this case today afternoon itself, this typical situation where the vendor is none other than a department of the central government itself. The Department of Central Government was charging me certain amounts. Along with those amounts, they was charging me GST also. This Department of Central Government has not filed their GST returns for 17-18 for a good 1 year time, and suddenly woken only somewhere in September, October 2018 and filed their GST return, GSTR1. And while they filed their GSTR1, they showed this entire invoice is under reverse charge. Now imagine if such a mistake is committed by the Department of Central Government itself. What would be the position of the taxpayers? If the revenue officials, if the part of the government machinery itself do not know how to comply properly with GST law, how can a taxpayer who is not so much aware about the different provisions and all these different forms would file his returns properly? This is the irony. So friends, in such cases, you would always have a ground to state that, sir, see my invoice. The person has issued the invoice to me, charging GST, has recovered the GST, and there is a mistake at his end that he has shown it incorrectly as a reverse charge liability instead of a forward charge liability. That mistake has not been rectified by him. You go and catch hold of him. What can I do? Is there a facility with me under GSTR 2A whereby I can reject certain things? Have you given me an option to accept or reject my GSTR 2A figures? It's a one-way communication. There is no two-way traffic. There is a two-way traffic available for your TDS, GST, TDS, and GST, TCS credits. But there is no two-way communication for your GSTR 2-way informations. Therefore, this 2A or 2B is not solely reliable to confirm a demand against me under reverse charge. Friends, there would also be an issue that would be raised by the revenue in case where you are importing certain goods on a prepaid freight basis, where your goods are imported on CIF basis and the freight is already paid by the foreign exporter. A long drawn issue right from 2017, from service tax era. The courts have struck down this levy not once but twice, but the government has not learned from their mistakes that simply they do not have the jurisdiction and the powers to recover tax on this portion. Friends, all would be aware, Gujarat High Court in case of Mohit Minerals has already held that this prepaid ocean freight on a CIF basis is not covered under reverse charge, and only in cases where the Indian taxpayer has paid the freight towards his import consignment to a foreign shipper, only in such cases that freight amount would be subject to your reverse charge GST. The next element that friends come into play is your payment to directors. Friends, the salaries that you pay to the directors, the remuneration that you pay to your directors would be out of ambit of GST under Schedule 3. Issue comes into play where you pay certain commissions, where you pay professional fee, or you pay sitting fees to your directors. Friends, in my view, apart from your sitting fee or board meeting fees, your other payments to your executive whole-time working employee directors in any form, whether it is in form of salary, whether it is in form of commissions, should not attract GST. But revenue has had a tendency to just let go of the salary paid to directors and create frivolous demand on other payments like your commissions and reimbursement of travel expense and all these things. In my view, this should not be taxable, and these would have to be fought out before the courts. Next thing, friends, to watch out for is the payment that you have made in convertible forex, which is already reported in your notes to accounts. These payments in convertible forex may or may not attract reverse charge as an import of service. The revenue has a tendency to state that every payment that you have made in convertible forex is an import of service or import of goods and all these things. Import of goods, they have got no issues because the duty has been already been recovered by the customs authorities. For services case, they have a tendency, very nice tendency, to completely ignore place of supply provisions under section 13 of IGST Act and section 7 and section 8 determining the nature of supply, whether it is actually interstate supply or not, and all these things. They have a very nice tendency to ignore all these things and simply quote the notification before you stating the import of service taxable. While you may try to make them understand, sir, ye taxable nahi hai, all these things, I have found a better way out of practical experience. Is simply, okay, sir, I am willing to pay my taxes. Please just simply state what is the place of supply I should quote in my returns. In which state should I pay the taxes? What is the place of supply under section 13, which subsection covers my category, and thereafter under section 7, where is my supply classified as an interstate supply or not? That is simply all you have to do and ask them. At a lot of time, friends, we have seen after asking such questions, they don't have an answer and they realize their mistake, that yes, these payment in forex are actually not qualifying as import of services and therefore not taxable. Only certain things may be qualified as import of services, certain things may not be. So all these things you need to make a note of before submitting your reports to the officers, and keep ensure that you have a proper explanation for all such things as well. Friends, the last element that comes into play for your common issues is the services by a foreign holding company or subsidiary company, where there may not be any exchange of money exactly. A common branding that has been purchased, or common patent that has been purchased, common software that has been purchased by the foreign holding company, and you are using all those patented things, logos, or your softwares or your brandings, for which there is no consideration flowing from India to outside India. There is no recorded transaction, but still importation of services for business or commerce from a related party from outside India is covered under Schedule 1. Even if there is no consideration, still it is taxable. There is a GST applicability on such transactions also. So we need to ensure that what are the different things made available, what are the different services made available by our foreign counterparts. There may not be any exchange of actual money between the companies, but let us internally at least understand where we stand exposed or not. So friends, that was about the common issues that we face during the GST audit, and what are the different ways we could handle these common issues. Now coming to the last limb of our session, handling these pressure situations. What are the different pressure situations that we face? What are the crux situations that we face while looking at after these GST audits? First and foremost, insistence on spot recovery. Sir, ये tax आपने agree किया, आज का आज भरो. Friends, there is no provision under section 65 or section 71 whereby the audit party can insist that you need to pay these taxes, whether agreed or disagreed, today itself, during the course of audit itself. I am well within my rights, even for my accepted liabilities, what points I have voluntarily accepted also. I can seek certain time and make payment in due course. In case I fail to make the payment, the revenue has got other methods to recover these taxes from me in form of demand notice and attachment of my bank accounts and everything. So there is no insistence on spot recoveries. In fact, friends, few months back, you would have heard about a case again from Gujarat High Court, whereby the court had specifically issued instructions to the department that there cannot be any spot recovery during the course of search and seizure also. Even if the taxpayer is agreeing for that tax amount, the payment has to be made only after the visiting party has left the premises. And the revenue authorities were taken left, right, and center by the Honorable Court. Even after instructing the government that you should put forth very detailed instructions for these regards, we are yet to see proper circular on the spot recovery things. But still, at least as far as your audit procedures goes, there is no provision for spot recoveries. If I'm not agreeing to certain things, they are supposed to issue me audit objections. I will reply to the audit objection stating that yes, I agree, I will make the payment due course or not. Accordingly, they will in their own sweet time issue me audit para and demand notices. So no need to worry if they're insisting for spot recovery. Simply, calmly, coolly, humbly deny that, sir, I cannot make the payment today itself. Allow me certain time. I will make the payment in due course. I have not denied the charges. I am ready to pay the payment, but it cannot be made today itself. Now, friends, during the course of audits, there may be certain small amounts, small issues that have been raised by the revenue. कुछ नहीं मिला तो छोटा छोटा कुछ भी फालतू का create कर देते हैं. And for such small amounts of like maybe 10,000, 5,000, 50,000, or maybe a lakh or two, the company may not want to go into litigation where the cost of litigation itself is high. In such situations where you are making the payment of amount, it is very important to submit before these tax officers that these payment of this amount that I'm making pursuant to this audit objection or pursuant to the audit para or pursuant to the audit observations is and cannot be termed as an acceptance of liability by me. You should very clearly put forth that this payment has been merely made by me just merely to avoid litigation and the cost attached to litigation and cannot be made as deemed as a acceptance of liability by me. Why this aspect, friends, is that the revenue officials have in the past taken the basis of your previous payments where the previous audit paras may be of small amount and taking that as a basis, stating that you have already accepted the liability in the past and made the liability. Similar liability, why should not be affixed upon you for future periods also? So this is where it is very prudent, important to make sure that you record that I am making this payment just merely to avoid litigation. By no stretch of imagination, this should be construed as acceptance of liability on my part. Friends, while they are issuing these audit objections and the audit paras to you, there are a lot of times we have seen that the tax officers are insisting on interest on your incorrect input taxes, maybe your 2A mismatches or double claim of your invoices, input tax double claims and all these things of reversal under rule 42. They're insisting on interest rate at 24% for any delays. Quoting section 50 subsection 3. Friends, very important to note that section 50 subsection 3, till that time it remains in force. Already it has been proposed to remove this section 50 subsection 3 and insert a new section. But till the time this remains in force, this 50 subsection 3 is applicable for an undue or excess claim of input, but under 4210 only. It is not applicable for other situations. What is section 4210? Friends, this was section for matching of your input tax claims, whereby if there was a mismatch between my GSTR 2 and GSTR 2A that was visible on the portal, the revenue would be issuing me MIS 1 form, and if similar MIS 1 be issued to my supplier, if the supplier does not rectify that mistake, then that input tax will be reduced from my next month along with the normal interest of 18%. and in the event I subsequently again claim the same invoice without it being rectified, then that subsequent claim is a undue or excess claim under 4210. So this 4210 is only and only dealing with the second claim of the same invoice. So the first time mistake, there is interest of only 18%, and this 24% is only for the second mistake on the same invoice all over again. Friends, as we all know, GSTR 2 has never come into play. GSTR MIS 1 has never come into play. So this section 53 does not have any locus standi. Similarly, when these officers are insisting for your interest under Rule 42 at 24%, if you have made a delayed reversal of your input tax, proportionate reversal, very specifically Rule 42 clearly put forth that interest only under 50 subsection 1 is payable. There is no applicability of 53 to 40 this reversal under Rule 42. So very clearly they are put forth, so there is no dispute on this front. And after the amendment that has already been made in the GST Act, at least for the input tax that you have possibly claimed incorrectly but not utilized, they have stopped asking for the interest amount on that. If you have not utilized the input tax, simply reverse it without any interest. That amendment is already proposed in the budget, just not made effective. Maybe in a few months it will be made effective. Second thing that comes into play, friends, is the insistence of the audit party to make payment of penalty under section 74 to close the audit. What happens, friends, is that I accept a small amount. Okay, it is payable. It could be a gray area. It could be accepted liability. I pay the tax. I pay the interest. They also ask me to pay the penalty, some 15%, 25% penalty under 74, and state that since this is the finding of the audit party, there is an intention to evade taxes. Since we have, as an audit department, we have pointed out this mistake to you. You have to pay the penalty. We will allege suppression. We will allege intention to evade payment of taxes on your part, and there cannot be waiver of penalty, complete waiver of penalty. Friends, in this regard, we draw attention to Annexure 6 of this GST audit manual, wherein the audit manual itself gives the option that even after the intimation by the audit party to me for my tax liabilities, the penalty can be waived off under section 73 if there was no intentional evasion of tax on my part. Very clearly put forth in the GST audit manual itself. So you could always and always show these things to the audit party that, sir, it cannot be a straight jacket formula कि audit party ने बताया तो evasion था और मैंने खुद ने भरा तो ही खाली मुझे benefit मिलेगा without penalty का. ऐसा कुछ नहीं है law में, sir. Even if the department has pointed out that mistake to me, what has to be seen is, was that mistake intentional or was that deliberate? If it was non-intentional, then there is no penalty under 73 if I am readily paying up the tax and interest. Friends, in certain cases where I am not agreeing to audit objections, let's say of GSTR 2 and 3B mismatches and all these things, there is a threat by these audit officials that I will block that amount from electronic credit ledger. आप नहीं भरोगे मैं block कर दूंगा under Rule 86A. Friends, under 86A, what has been put forth the situation for blocking of your electronic credit ledger amounts is that if you have taken a fraudulent input tax, in simple words, entry घुमाई थी किसी ने, someone has taken an entry, actually not got any goods or services, just taken the invoice, just taken that entry. In such cases, credit can be blocked, or where the tax that has been charged has not been paid to the government. So if the vendor, even after maybe recovering that tax from me, if has not paid the taxes to the government, mind you friends, payment of taxes happens in 3B, reporting of transaction happens in GSTR 1 and reflected in 2A. So merely because it is not reflecting in 2A does not give the indication that the tax also has been evaded. That has that evidence is not there with the department. So unless and until there is a clear evidence with the revenue to state that the tax has not been paid by a vendor, they cannot block my electronic credit ledger also. The next element that comes into play, friends, is the attachment of your bank or your properties. Specifically in case of your admitted liability or disputed liabilities. One may think, okay, if it is admitted liability, they attach my bank if I'm not paying up. But what if I'm disputing liability? How can they attach my bank and all the my properties? So friends, if you see, first and foremost thing, your audit procedure is not covered under chapter 12, chapter 14 or chapter 15. So there cannot be an attachment of bank or your property merely on issuance of audit objection or your audit report. Pursuant to the audit report in form ADT02, there has to be mandatorily a demand notice in DRC 1, the proceeding under chapter 15 in form of demands has to be commenced before the bank account property is attached by the revenue. So merely during the course of audit, the properties cannot be attached. There is no provision for attaching property during the course of audit itself. It has to culminate and result into a demand notice. Only in such cases, the property can be attached. Friends, another issue that comes into play is that the Director General of your CBIC, asset your analysis and risk management. So this is the kind of intelligence or your artificial intelligence wing, whereby they have put forth a lot of softwares and a lot of effort in creating red flags, whereby they give out the areas to look out for, the possible evasion areas to your audit party, and they have a detailed check. These audit parties have detailed check on such areas on various ratios like your input versus output ratio, your GST at 2A versus 3B ratio, what is the different value, your reverse charge paid versus reverse charge credit claimed ratios, your import ratios as per your customs records and as per your GST records. All these various ratios are taken into play. What is your cash to credit ledger ratio? So all these areas, they have a check. But if you are legally correct, if there is no legal debarment, just merely based on this artificial intelligence report, there cannot be any demands. You could always and always explain the actual situation, the legal situation, and your legal entitlement. We have had such different reports issued by the audit parties, whereby even these audit parties had no clue कि ये ratio कहाँ से आया, Director General of Analysis and Risk Management ने कहाँ से क्या figure निकाला है. But once we made them aware of our actual figures and facts and figures and our legal eligibilities, they have let go of all these different issues. They can very well put forth in their reports that yes, we have verified and nothing amiss was found in all these things. Last thing that comes into friends in all these situations and how to tackle all these officers is that try and maintain the visitor logbook to prove when they have commenced the audit, when they have completed the audit. You also need to ensure that the facts of your case and the correct figures are clearly submitted. If there is any demand notice, let that demand notice be on interpretation of law and not on finding of the facts or the right figures. Mention all your correct facts, mention all your correct figures clearly on your covering letters and your audit reply letters and everything. If there's a dispute, let it be only on the legal points. During the course of audit, friends, it is always advisable, be calm, be respectful. There is no point challenging the authorities that you are not empowered to do this, you cannot do this, आप ऐसा कैसे कर सकते हो, आपके पास power नहीं है, ये नहीं है, वो नहीं है. There is no point whatsoever, because even if they find that they don't have the powers, once they come on an ego trip, they may put forth the information to the intelligence wing or the search and seizure wing and keep on troubling you throughout your entire life. So instead of challenging them, being disrespectful, be respectful, be calm, and softly and humbly mention, sir, this is our position. This is our viewpoint. If you have something contrary, please put forth your objections in writing, nothing else. And instead of having verbal arguments with the visiting officer, if that junior officer is not understanding the legal positions or the factual positions, it's preferable that we could very calmly and softly mention that, okay, sir, if you are not agreeing to this position, let us do one thing. The superior officer will be visiting us on the conclusion of the audit. We'll explain this case to him. Let him take a call, whatever is to be done. And if they don't accept your submissions, they don't agree to your submissions, make sure that you have a written submission for all your explanations. Finally, friends, what I advise is to resist the urge to file writ petitions without proper consultation analysis, because your ego or your this has been hurt. Just because you have a legal team at your disposal, just because you have got the resources with you, just because you have the money power, it is not advisable to file writ petition just like that. What happens is that if you file your writ petitions without proper consultation, proper analysis, without proper coverage, there could be situations that the writ petition may be dismissed by the honorable courts as being without cause, very premature, and you would lose out a legal remedy which may have been available to you maybe a few months later after issuance of demand notices. So even if you're contemplating to file a writ petition on high-end matters, do it with proper consultation analysis, whether what are the chances of the writ petition being accepted and what are the chances of it, you're getting a relief. Or instead, whether you're better off fighting out the case in the lower level and wait for the GST tribunal to be notified. So friends, that is all from my end on GST audits. I hand over the proceedings to WILC. Before can we take a few questions, Praveen?
Yes, sir. I am starting the questions.
Yes.
In case if the SSC has accepted the findings of the audit para, can the SSC still go for appeal later on?
Absolutely, sir. Wherever you have even accepted the findings of the audit paras, you may still go into the appeal. But again, over here, whenever you are accepting such audit paras, you may wish to put forth a disclaimer in the form that prima facie, based on your explanation as per your objections raised, it appears that there could be tax payable which we undertake to pay, but subject to further consultation with experts and without prejudice to our further legal remedies or rights. Even if you have not mentioned all these things in your earlier audit replies, you could always take a stand that since the penalty was also levied, which I was not aware, I'm wanting to litigate this matter. There may be certain further legal developments that may have taken place, which have changed my viewpoint. So all these things come into a favor, and thereby you could go into appeal even if you have accepted the audit paras.
Can we take show cause notice to the extent of penalty only?
Yes, sir. Very much. If the tax has been paid, maybe with the delay, the show cause may be issued only for penalty amount. If there is a procedure non-compliance, the penalty may only be the show cause may only be for penalty amount.
One of the question: place of additional business is not registered. Can ITC be claimed on rent payment?
You could claim it, sir, but it's a litigative area whereby you have favorable rulings from the courts in the past, but always preferable that you register your additional place of business at least on the day the audit was conducted. The revenue may not exactly go into the details कि आपने कब add किया उसको, but जिस दिन audit किया उस दिन तो अगर records में दिख रहा है तो it would help you.
Okay, sir. Another one. What if ITC claimed in GSTR 3B in 1 month is in excess with 2A or 2B of that month, but the same ITC is appearing in next month in 2A or 2B? Will it attract interest? If yes, under which section and rate?
So, sir, in my view, first and foremost thing, this matching with 2A, 2B has got some legal backing only from 1st January 2022. assuming this is a case of after January 22, there could be an interest implication for that 1 month's delay, whereby the ITC was not available to me and still I have taken prematurely. So the revenue could recover that interest from me. Till 31st December 2021, you could very well challenge the basic provisions of Section 36(4), whereby this provision didn't have any legal backing in the GST Act itself.
Okay. Another, if Gujarat supplier raised rent invoice, manpower service invoice for the services delivered in Gujarat on Maharashtra recipient, can Maharashtra recipient take ITC since he has complied with all pre and post condition of ITC? Merely supplier has erred in invoicing, erred in raising invoice with correct tax category. Will recipient be penalized?
So in case the Gujarat supplier has charged you central GST and Gujarat state GST, principally that would not be a correct invoice, and you before making the payment to him, you should have ensured that he charges you IGST. If you get an invoice for IGST and he has made a mistake on the GST portal, then you have a case to argue. But if the invoice itself is incorrect, then you would lose out your case.
Okay. Another question, my dealer purchased material but the supplier paid the GST after 2 years. What is remedy for me?
So the supplier has defaulted on GST payment for 2 years, sir, but ultimately if it has been paid to the government and the invoice was already issued to me 2 years ago, then in light of the various judgments that are coming and in view of the conditions of section 16 subsection 2, specifically that the tax should have been paid to the government. Once the government has realized its taxes, I should be allowed my input tax, sir. You would have to litigate it to some extent, but once the tax is paid, I should get my input.
Okay. Another one, whether reversal of ITC is required in case of retention money, if retention is money more than 180 days. Words written in law is fails to pay.
So the words written in law, Praveen, does not take into consideration your credit period. If the credit period or that liability to make payment of that retention money itself was accruing after maybe, let's say, 1 year, still I will need to claim my input, reverse my input and reclaim only when I make the payment of that retention money. That is the legal position that as it stands.
Okay. Another one from a participant. One of my client had received audit notice in December 2020 and they had even visited our premises once for audit in January 21. However, after that, we did not hear anything from them. Now the client has again received notice for GST audit from different officers. And they inform that audit of your company has been reallocated and they will again initiate audit. Is this valid?
Sir, do you have evidence to put forth clearly that they have visited your premises and the documentation entirely was made available to these officers? This is where we are talking about the commencement of audit. At some point of time, the revenue would have the necessary covering letters to show that certain documents were not submitted by you, and hence the audit could not be commenced due to your non-cooperation itself. So you could fight out your case only and only if you have provided the entire set of documents to them and they have already visited your premises and you have a record to show that they have visited your premises also.
Sir, in this case, condition of 3 months is applicable because officer already visited our place in January 21.
Sir, this is where the record logbook, your visitor record logbook, what I mentioned in my last slide, comes into play. First and foremost thing, do you have evidence to show that you have submitted the entire documents and records called for the department? That's point one. Second, after you have submitted all these things, do you have a record to show that they have visited your premises? If you have these two records, then yes, you would be well within your rights to argue before the authorities that the audit should have been conducted within 3 months. And if there was an extension, the extension cannot go beyond 6 months. The provisions of section 65 are very clear on that front. If the subsequent audit was supposed to be done, it was supposed to be done, let's say, by your August, September 2021 itself.
Okay, we submitted all records and show visiting report also. Then they can again do audit right now.
So if it is
Right.
already been audited, you merely haven't received the audit report, you would have a legal ground to fight out your case that they cannot conduct an audit all over again. At least if it is not within that period of that 3 months or extended 6 months period. But within that period, they would be empowered to revisit, re-verify all these details, do all these things. Your relief would only and only come in form of a writ petition before the High Court. Other authorities will practically not entertain your pleas in absence of an audit
sir.
report.
Okay, sir. Another question. In one state, GST audit by department is going, but I want to amend my RC and add additional place of business in that state. Whether GST officer have power to disallow my amendment due to reason that personal hearing not attended.
So during course of your registration amendments, at least for your amendment for registration, the show cause notice
During the
that is
course of
issued to
audit.
you, there is no personal hearing that is conducted for rejecting your amendment to registrations. There's only this clarification that are sought from you, additional documentation that are sought from you, which is submitting on the portal. There is no demand that is being made against you. Hence, there is no personal, there is no provision for personal hearing. So I don't think so. The query has been put forth in the right perspective, sir.
Okay. And then one, whether the auditor can ask to pay the tax verbally.
No, sir. You could always insist on written audit objection, sir. Very much. If I'm not mistaken, sir, para 5.14 of the audit manual 2019. It's, I think, on page 46 or 44.
Correct. And last one, dealer is registered in Karnataka, purchase material from Gujarat, paid IGST, but dealer has not paid the IGST. Now dealer is selected for audit for Maharashtra state. My question is, AO can write in order for not paid IGST by dealer or force the dealer to pay IGST.
So your audit has been selected for Maharashtra. The purchasing supplier is from Gujarat. But the buyer is in Karnataka. So what? How is Maharashtra coming into play?
Yeah, that is a question by a participant. I see it's something wrong. Yeah. Anyone have another question? No, sir. Anyone? Okay, sir. Then we can conclude this. Someone have question? Okay, sir. There is no questions.
So thank you very much to WIC and teams and Praveen for putting forth these questions before us and for allowing me the opportunity to share my views and thoughts on this topic. Thank you very much from my end.
Thank you, Sumit sir, for sharing your wonderful knowledge and clear our doubts. Thank you, sir.
We'll log off, sir. Thank you.